Yo, what's going on? Facebook, YouTube. It's Joshua with Win More Forex Trades. Man, I am back. I am back. I had went out of town for a couple of days with the job, and then my birthday was Sunday, man. So I went and enjoyed myself out in Jacksonville, Florida. So I had a wonderful time out there, man. And I have to post up some pictures to the fan page. If you guys actually follow my actual personal page, you'll see that I have made some posts already. If we are friends on Facebook, but man, I'm back. We finna get into it real quick. Man, we got the USD JPY coming up right now. Let's go. All right, man. Man, just come back and see what the market has been doing. It's the weekly time frame. We start off with the weekly time frame, and we are using the weekly time frame specifically for direction. As you guys should notice, we're going to do the same things over and over and over again because the market likes to do the same things over and over and over again. So we're going to use the weekly time frame to find direction, and we're just going to focus on the previous swing here. And you can see what looks like a uptrend. We're going to find we're going to bring in trend lines. We're going to do Fibonacci's, crown formations, past support becoming future resistance, and so forth. But our first step we need to do is we need to separate the market into buy zones and sell zones. But we need to find the lowest point of the market. So we need to zoom in here so we can make sure our trend lines are done properly. Because in the uptrend, you want to start at the lowest point of the uptrend, and you want to bring in trend lines from that point and wherever you see a touch of the trend line. Alright, so we have another touch there. Let's zoom in on that area again. Alright, let's bring in another trend line. Alrighty, see what it looks like. Alright, we have we have an uptrend that's going on, and the uptrend has broken, the market has broken this inner uptrend line, and the market is going to gravitate to the next trend line. We have a stochastic that is overbought, so this is very simple. We got overbought stochastic. The market is in the sell zone as the trend lines separate the market into buy zones and sell zones. We have the market breaking this uptrend line, then come back up, testing the backside. It actually entered back into the buy zone, but came back into the sell zone, and now we have found looks like an area of sideways movement. But we'll get a closer look at that as we bring in Fibonacci's to actually see where the market could possibly go on a weekly time frame. And if you guys can see right now with this trend line being broken, and we have possibly a crown formation on the weekly time frame. So let's see if we can bring it up here. So let's go and mark off our A that was taken out. We like to do that in black. So there's your A that was taken out, and let's identify the left tip, and there's your left tip right there. Alright, and you guys can see the crown formation right as so, with left tip and center tip. Market takes out the A, and that's the deepest point of the right tip so far. So there's the crown formation on the weekly time frame. We have a Fibonacci on the crown formation, and we have a 618 retracement. and the market has went into some sideways movement. And where that A was taken out, starting to find some support there, and just above, right where the backside test of this uptrend is holding that resistance. So with that being said, this market is overall bearish, but we are in what looks like a consolidation range. We have resistance and we have multiple levels of support right there at the left tip of the crown. That has been support. And where the A was taken out on that Fibonacci swing, that has been holding at a second level of support. So with that being said, with the market actually touching our trading plan, is going to be as simple as follows. We're going to sell resistance. See, every time the market hit their resistance, you made pips. Every time the market hits resistance, we made pips. And every time the market hit support, when we bought the market, we made pips. Every time. And right now, we hit that level of support. We've coming up and we've bounced off the second level of support. Well, actually the first level of support. Now we're looking to buy this market up until the resistance, which is 326 pips away. So that is 326 pips of opportunity. 326 pips of buying opportunity. All right. So that is the weekly time frame. As you can see, crown formation, market breaking the trend line. We have the market taking out the A. We identified the left tip. We anticipated the right tip, which is up there, and the market begins to start falling, but the market has entered sideways movement and has been in sideways movement for almost going on 2 years now. So if the market has been doing that sideways movement for 2 years, what's to say that the market's going to stop doing it now? So let's go ahead and look to start buying the market up to this to resistance, which is 326 pips away. So we'll go to the daily time frame. Daily time frame is specifically used. We use the daily time frame for high and low prices. Daily time frame, high and low prices. All right. And now, just because the daily time frame is used for high and low prices, we still will use the same analysis or the same trading styles that we do. We still separate the market into a buy zone. We separate the market into buy zone and sell zones. We use our trend lines. We're going to be using past resistance becoming future support, and we're going to be using counter trend line breaks and looking for crown formations as well, along with Fibonacci's. So, all right, daily time frame. We are just looking for the buying opportunities. And actually, let me go back to the weekly time frame, and let's link these to the lower time frames, just so we can see exactly what a support and resistance is on the daily time frames. So okay, all right, now we go to the daily time frame, and there's those resistance and support levels there. All right, so we're going to focus on the latest downtrend, and let's see what the market has done. All right, we're going to bring in trend lines, separate the market into buy zones and sell zones, find the highest point, and bring in the trend line. Where's the next touch of that trend line? Right there. And we had another touch here, and there's your trend lines there, and we extend to get a better picture of what can happen. All right. So you see we have three trend lines. We have a downtrend line, you have your inner, and you have your inner downtrend line. Market breaks this inner downtrend line, back tests the backside, goes up, and has been holding that resistance of this downtrend line. So with that being said, daily time frame is at a high price right now. So we will not be buying this market currently because the market is at a high price and it is still holding resistance at that downtrend line. So in order for us to get the buy signal, since the market is entering in, the market has entered in the buy zone according to the consolidation range of what the market has been doing over and over for the past 2 years. But we are holding resistance at this downtrend line right now. So the market could come back down, and what you want to do is you want to wait for the market to give you a low price. Then once the market gives you that low price, then you want to buy the market at a counter trend line break. So the illustration, let's draw it out. All right. So the market has moved up. Well, let's start back here. Actually, the market has been waving like so. Market has a high, market has a low, has a lower high. Then the market makes a lower low. Now the market has came, holding resistance, made that lower high. Market could possibly come back down again. But if the market wants to hold at support at this the left tip of the crown formation on a weekly time frame, then we'll wait for the market to fall, and then once the market falls and begins to come back up, then you start buying the market here. We'll start buying the market there at a counter trend line break. Market gives you a counter trend line break, start buying the market. There you go. We'll buy the market there. And it's that simple when it comes to the consolidation range. So considering that we're in a consolidation range, the market does have a lot, and it's been in this consolidation range for almost 2 years. So I mean, it is a strong possibility that we could be going up to the resistance level. So we would just have to keep a close eye on this, because uh, in order for us to buy, in order for us to start buying sooner than later, the market would have to. All right, let's do it. Nose lock's not on. Okay. All right, and for us to start buying the market sooner than later, the market would have to, from this point, would have to break that's downtrend line, come back and test the backside of the trend line, and then once we go up again, then you can buy the market here. So it's two ways to look at that. Or that can be two separate buying opportunities based on the daily time frame. So, but right now, price is too high to buy. As a trader, you want to buy high, you want to buy low and sell high. So, with that being said, this could ultimately be a position to start selling right now, as long as the market is holding above, as long as the market is going to hold resistance at this downtrend line here. So let's go look at the 1 hour time frame and see what the story tells us on the 1 hour time frame. So the 1 hour time frame, this is our entry strategy. This is where you use your entry strategies. Just put entry strat. You use your entry strategies on your 1 hour time frames. This is where everything, this is where your bread gets buttered, when you use your entry strategies on your 1 hour time frame. So we're just gonna come in on the latest uptrend, which is right here. We want to find the lowest point of that uptrend, and we want to bring in uptrend lines. Let's get this out the way. We're bringing uptrends right there. We have a touch here, and we have a touch there, and there you have it, guys. The overall movement in this market is bearish. Yes, the overall movement of this market is bearish on the weekly time frame. Like I said, we did break the uptrend line, entering in the sell zone, but we're in the consolidation range that has been doing the same things for the past 2 years. So to make it easier on us, we want to do the same thing that the market has been doing over the past 2 years. So since the market has been in the consolidation range, we do want to go start looking to buy, but the daily time frame is giving us the signal that we could be short-term buying this, short-term selling this market, to catch us a couple of pips here right now at the moment. So let's bring in Fibonacci's here, and we bring in Fibonacci's, and we can see we do have a up A to B boundary. We have a 618D extension that was hit not too long ago, a couple of hours ago. We have a 1618D extension that has been hit, and the market likes, when the market hits a 1618D extension, the market likes to retrace. So with that being said, we have an uptrend that looks like it's being broken at the moment right now, and we have a 618D extension, and the market likes to reverse after hitting the 1618D extension. So this could be a grand opportunity to start catching you some pips to the south, but in order to start selling this market, which can be very soon, we will want to let the market do as follows. All right, the market has this high price. The market is now breaking this trend line. Let the market come back up, test the back side of the trend line, or give you a high price. Then the market starts to fall, and then it'll continue to wave like so. And it'll continue to wave like so, and it'll go down all the way down to this trend line. The power of trend line trading: the market breaks the trend line, it will gravitate towards the next. So we have three different set of rules to our trading strategy that lets us know that could line up with this selling opportunity here. And jump the gun. But yes, we have three rules to our trading strategy that is coming to fruition right now in the markets. You sell that and you sell all your high prices. All right, hold on. Let's bring that there. I don't want to get too far ahead of myself, guys, but that's what it would look like. But okay. But here on the daily time frame, we have the market at a high price. This is the illustrations will let us know if we want to buy buying opportunities are not coming up for maybe a couple of days. But right now we do have a high price holding resistance at this downtrend line, so we could be looking to sell to get some pips here. And look at this, the daily time frame has a stochastic that's overbought as well, just like the weekly time frame. and we hit, when we go to the 1 hour time frame, we first things first, we have a 1618D extension that has been hit on the Fibonacci swing. And once the market hits a 1618D extension, the market likes to retrace. Secondly, we have the market right now breaking this uptrend line. And when the market breaks this trend line, when the market breaks an uptrend line, the market loves to gravitate towards the next trend line. And that's what's called power of trend line trading. So if the market holds in the sell zone on a 1 hour time frame, again, we'll wait for the market to come up to a high price, and then you start selling at a high price. And once we get that movement, we can come back with stops and take profits. Um, Guys, usually when it comes to this is actually a short-term movement based on the consolidation. So you want to usually go a 1-to-1. However many pips you're going to decide to risk, that should be the pips you should be going after as reward. So with that being said, that is the USD JPY at the present moment. I will be coming back with more updates from what I'm looking at in the markets, guys. So with that being said, I'll see you guys in the next video. Appreciate you hanging out with me.